North American Freight Market Insights. We can all agree that 2022 was pretty dragged out. The trucking industry is definitely disorganized at the moment. But if you are aware of important factors, you can mitigate your risk and avoid disruptions to your supply chain better than others. In this video, we have focused on how you can drive your business forward with timely information on freight trends and insights on supply and demand influencers. Let's take a look at factors currently supporting LTL pricing, how demand for LTL continues to grow, LTL price forecasting, how truckload market shows signs of stability, important points taken from the U.S. Energy Information Administration (EIA), what you can expect from mind-boggling 2023 to 2024 congressional government regulation. To say that this peak season is underwhelming would be an exaggeration, but let's go ahead and look at some industry facts and numbers. Factors currently supporting LTL pricing. First, let's consider LTL demographic market. The less-than-truckload business is now facing certain physical limitations while also continuing to quickly adopt new technology. Here is the graph from C.H. Robinson's research, where you can see that the LTL market with approximately 91% of LTL revenues is managed by 25 LTL carriers. It is known that the truckload market has hundreds of thousands of carriers, but the LTL market demographics look vastly different. While the market offers 110 carriers, their services vary by market and lane. To successfully secure LTL capacity nationwide, shippers require a strategic approach that optimizes the breadth of the market. Now just take a look at how demand for LTL continues to grow. Tong and terminal changes between 2019 and 2022. In this table, you can see that during 2021, the LTL industry experienced a 9% surge in tonnage as well as strong volume growth. It suggests the possibility of capacity and tonnage volume balancing as early as 2023. 2001 to 2022 LTL insights. LTL carriers have declined roughly 10% since 2010. Of the 16 years from 2007 to 2022, 12 have seen contracting or flat LTL capacity, with estimates for 2021 roughly flat and 2022 reflecting 2% growth. There could be a net no change in market capacity. As such, be sure to reassess your carrier diversity strategy so it respects this shift and the possible loss of capacity. LTL price forecasting. LTL carriers are publishing general rate increases (GRIS) of around 5%. The actual pricing budgets will rely on the freight attributes, carriers, and modal strategies employed. While some lanes will take larger increases, others could provide considerable savings. Accordingly, LTL carriers will continue with highly disciplined pricing, despite the decelerating tonnage and volume forecasts for 2023. How truckload market shows signs of stability in 2022. Drive-in LTR is the largest segment of the truck market. It is performing strongest against the 5-year average in most markets across the country. In this graph, the blue line shows the current truckload spot market LTR with the 5-year averages. Of late, green line shows today's market is trending below the 5-year average, which is one indicator that suggests the market is oversupplied. Refrigerated truckload continues to offer some regional tension and slack but has established a long pattern of below the 5-year LTR. In this graph, the blue line shows the current truckload spot market LTR with the 5-year averages. Of late, green line shows today's market is trending below the 5-year average, which is one indicator that suggests the market is oversupplied. Today's flatbed spot market continues to offer plentiful capacity in most markets with LTRs well below historical averages and spot and contract pricing closely aligned. In this graph, the blue line shows the current truckload spot market LTR with the 5-year averages. Of late, green line shows today's market is trending below the 5-year average, which is one indicator that suggests the market is oversupplied. Moving forward, let's take a look at Route Guide Depth US Region. Robinson reflects weekly RGD regionally across the United States through the week of December 11 to 17, 2022. As we can see, the November national average RGD of 1.18 was largely unchanged from October. The Northeast pattern continues with the highest RGD of 1.28, offering the greatest variability in RGD in the fourth quarter. To be honest with you, route guides are really performing well, with primary service providers accepting loads at pre-pandemic levels and the first backup provider accepting rejected tenders most of the time. All right, I hope you are connecting with us and getting better insights into the market. If you have any questions, drop a comment and we would be happy to answer them. Now take a look at what is going on with diesel pricing. The most current statistics from May show the historical days of supply. Analysts reporting on this situation represent that while inventory was at the lower end of the historical patterns, production, imports, and lower forecast. 3 most important points taken from the U.S. Energy Information Administration (CIA) December Short-Term Energy Outlook. Lowers 2023 global oil demand by 160,000 barrels per day. Raises expected U.S. crude output by 30,000 for 2023. Lowers forecast for the average 2023 retail diesel price by 17 cents to $4.48 per gallon, falling 11% from the expected full-year 2022 average of $5.05 per gallon thanks to high refinery utilization. Moving ahead, now take a look at the less-than-truckload LTL shipping. Public LTL carriers continue reporting mid-single-digit tonnage and shipment count declines, yet pricing messaging continues to hold. This is due to market balance and the increased costs of investment for terminal expansion improvement, driver and mechanic compensation, and tractor, trailer, and parts costs. Well, that is a welcome sign. Have a look at from where the best rate opportunities will come from. Lane-specific opportunities. Carriers seeking volume to offset market shifts. Accessorial fees. Some fees may be withdrawn or lessened. This will be very selective rather than broadly applied. Enhancements to a carrier diversity strategy. Aligning freight with carrier interests. Utilization of truckload consolidation, primarily for large and over-dimensional shipments. Trade-off of service for pricing, shifting from premium carriers to standard service carriers. Last but not the least, let's take a look at what you can expect from mind-boggling 2023 to 2024 congressional government regulation. As the new session of Congress for 2023 to 2024 has already started in January, supply chain professionals should closely watch 2 upcoming bills. The Federal Aviation Administration FAA reauthorizing bill addresses independent contractor arrangements in trucking and standards around motor carrier selection for shippers and brokers. U.S. Customs Agency 21 CCF, also known as the 21st Century Customs Framework cyclical reauthorization, and Congress's intention to focus on funding enforcement resources or trade facilitation resources. We hope in this video we were able to answer a lot of questions you may have and covered important factors you can consider to mitigate business risk and avoid disruptions to your supply chain better than others.